WiM595 popularized the term "nothing stops this train." I was talking about the fiscal deficits. It's because we can't agree on how we're going to balance things, so this error just keeps spilling out as we fail to agree with each other. And in a Bitcoinized world, that can't really happen. There, like, defaults happen before that just runs forever.
Yeah, is it fair to say that it was like a bait and switch, that we got used to using these paper derivatives and then eventually were rug pulled on the underlying commodity?
What that did was that gave a ton of power to the entities that were running this ledger. And then by extension, that was the central banks. And because those are really big honeypots, the government can just kind of say, we control that now.
When I was debating Peter Schiff, this was like probably the crux of my argument. You can't scale gold without promises.
So it's not to say that it's useless, but it doesn't serve that same purpose of really trust minimize money.
Because it's highly corruptible, right? That someone could get in charge of that thing and then bend the rules to disfavor everyone else and favor themselves.
If one central bank does things improperly, and that central bank, the Bank of England, did in World War I, they literally lied and cheated about how much money they were printing. They rug pulled not just their own citizens. As the global was occurring to the time, they rug pulled.
How does Bitcoin then come into the picture? Is it a viable solution? Lyn, good to see you again.
You too. It's been a while.
Has been a while. We did a thing recently, but it was remote. So
Yes.
we have spoken recently, but we haven't seen each other in a while.
Yes.
So. I wanted to do this. We're at Bitcoin 2025, so we've got about an hour today. I figured what would be a good use of our time is to just walk through some chapters in your book, Broken Money, and just use those as conversation points and just talk about some of the highlights of your book and hopefully create something that's educationally nutrient dense for people.
Sounds
as
good.
Your book is.
I'll do my best. Yes.
The obvious place to start, I mean, the title of the book again is Broken Money, and you start very early in the book by defining money. So if I could ask you my favorite question, what is money?
So I view money as the best ledger that people use in order to keep track of savings and transactions. And ledger itself can have multiple meanings. The reason I phrase like that is to try to combine the commodity theory of money with the credit theory of money rather than have them kind of speak past each other.
Okay.
And so we often think of money as a physical thing. Whereas in the modern era, it's often a ledger, like something that is just our bank account has a ledger. The banks have, a central ledger between them. But in the book, for example, I talk about some informal ledgers. Like people can have small groups and they keep mental track of kind of who owes what. That's often like an easier way to kind of ease around barter is just by having that kind of informal credit system. So whether it's letting nature itself be the ledger, which is what we do when, for example, we have gold and silver coins, for example, or having some sort of human construct as the ledger. It's basically whatever's the most saleable thing that humanity's kind of using at that time, which has there's technological details that go into what is the best money. There are certain political realities that happen during periods of time that determine what is the most used money. But basically, it's the ledger that people are either they have to use because it's forced on them, or the one that they're choosing to use from a bottom-up perspective to keep track of who owes what.
Who owes who what? Yeah. So when you say ledger, I mean, I interpret that as like a list, right? Where it's a list keeping or record keeping function. And we are quite literally tracking the favors, right? Who has rendered useful favors to society, largely speaking, and then who has then due favors in return. A lot of people delineate, though, between tokens and ledgers. You're kind of combining them. Is that right? So I guess you were saying when it's a token that there's like an implicit list being kept. So when we trade gold coins, no one's actually keeping the list, but just by virtue of possessing that bearer asset that functions as a list? Is that
basically nature serves as the ledger manager for the token system. And basically, even though that's it, what's unique about the token or natural ledger is that there's no one person or one group that has the full snapshot.
Right.
And yet that still exists. There is an objective number for how many gold coins are in a given region, even though no single person is sure what that number is per se.
Yeah.
But that number still exists. And so as that gets updated by physical possession, that's one way of tracking a ledger. Now, it just contrasts with most of the ways we do ledgers.
Yeah.
But that's one of the ways to kind of just unify those two concepts and see why they're not totally different things. They're just kind of different functions of an underlying similar principle.
I see. And because this, I mean, it's funny because gold like emerges as money before we're even thinking about keeping lists or using gold as a record keeping system, right? It's an emergent phenomenon. So it reminded me of Hayek's, by human, what does he say? When it's something spontaneously emerges by human action but not by human design kind of thing. So is money then I've heard sailors say this before, it's the ideal money is like this big spreadsheet in the sky that we can update but no one can corrupt. We need this incorruptible spreadsheet in the sky. And that's basically what gold was functioning as historically, but then it had limitations. Is that the right way to think about it?
Yeah, it was too slow, and then to some extent it even had scarcity issues that you could still make more of it. So I think if we imagine the Platonic ideal of money, it's it's a perfect ledger that can't be corrupted, and we can just beam it to each other. We can just teleport it around with no friction. Yeah. Now, obviously, the Platonic ideal does not exist. So the question is, how do you get as close as possible to that? Yeah. I think in obviously the current era, the closest thing we have is Bitcoin, and that actually gets quite close to the Platonic ideal. Yeah. And going back in history, it's the bottom-up nature is fascinating because you've got multiple cultures that kind of come to similar conclusions, and they don't even articulate it the same way, and yet it kind of reemerges time and time again. So going back to Nick Szabo's essay, The Shelling Point, and other kind of research at that time, it showed that hunter-gatherers often used jewelry beads as an early form of money. Yes. Because it served a lot of similar functions. It was human-intensive labor to make, so it's scarce. But then unlike other big scarce things like meat or spears or something, it was portable. It was small, dense, and importantly, you could wear it, so you didn't have to have it in your hands. And that set of traits, served as money. And obviously, as we got into gold mining, that became the new sort of ornamental, even more dense and even harder to make. Yeah. But that's kind of the natural progression that humans have gone through.
Got you. So we start with then commodity money, just sort of, it emerges, right? It's not a top-down thing. How do we then go from commodities as money to gold becoming the dominant commodity? What is it about gold that makes it outcompete everything else?
Mainly, it's the best commodity for it. So basically, as all the different technological groups come together, the ones with better technology can make more of the other one's money. They can't make more of the technologically superior culture's money. And basically, when you kind of iterate through that, when all the different cultures of the world kind of came together and kind of evened out, gold and to some extent silver basically beat all the others. They have the highest natural stock to flow ratio. They have the longest durability. The kind of the most dense you can kind of get for the most part. And if you go into even rarer things than gold, then you run into liquidity issues. People could technically use meteorites for money, but they're not fungible. They don't have a lot of the traits, even though they're super rare. So it's kind of getting as scarce as you can get before you actually start having issues related to the other metrics of money. And that's why gold is that sweet spot. And the only limitation of gold is, one, it was slow. And two, it wasn't as divisible as people would like it to be. It's hard to, make a small enough gold coin that you can make it an hour of someone's work or, and so that's where silver was common as well. So you'd have that kind of bimetallic, standard combined with some of these other informal ledgers. If you need to break things up, you can say, well, you do this for a little bit and you'll owe me one piece of silver, for example.
Yes, got it. When we start to abstract then gold and silver into paper, what does that do to the bimetallic? Because to your point, we had a bimetallic standard for several hundred years, right? What does then abstracting those commodity monies into a paper currency, what does that do to the dynamics of the underlying commodity competition?
One of the main things it did was it kind of killed silver. That was kind of the silver was hanging in there for a while as the second best money. But once both gold and silver became divisible in similar ways, silver's primary advantage to gold was basically abstracted away. Right. Now there still was advantage of having gold and silver in your own possession. As we saw, all the issues of gold-backed paper all defaulted eventually. Yeah. But as long as people were using those systems, it was if gold and silver are now equally divisible by extraction, then why do we need silver for anything? Yeah. And any cultures that kind of hung on to silver longer than they should have, it got to the thing where people that had gold could debase silver quicker than the other way around. Right. It's not as high of a stock to flow. And then over the long run, it even kind of overtook gold because we basically levered the system so much that when we actually dropped gold from the system, instead of the rest of the system fully collapsing, we actually, to this day, are still using these abstractions because we live in an age where speed actually matters for the first time in most of human history.
Yeah, is it fair to say that it was like a bait and switch, that we got used to using these paper derivatives of gold and silver, and then eventually were rug pulled on the underlying commodity, but people go on using them by force of habit?
I think that was a really big component because that made it seem like natural to happen. But I think that the other principle was this actual technological limitation of gold, which is as the world became connected by telecommunication technology. So the telegraph, invented in the 1830s, deployed cross-continent and then across the Atlantic Ocean in the 1860s. It actually wasn't cross-Pacific until like the really early 1900s. Then, of course, radio and telephone and internet. As we kept speeding everything up, gold was just not quick enough. So we were kind of using these paper ledgers, but then they're run by humans and they break them. But then the funny thing is, for example, when you see in a developing country, if their currency breaks, usually rather than going to gold, they go to like dollars or something. They dollarize more than goldize. Now they still use gold often for longer term savings, jewelry, or stashed away in some context. But for their actual medium of exchange use, they often fall toward a stronger fiat currency because we live in this age where speed is relevant, which wasn't really the factor before the telegraph.
So that's a big theme in your book, right? This divergence between the speed of information and the speed of money. And maybe this is another way to interpret money too, is that it is a messaging system ultimately.
Basically, yeah.
And so we tried to accelerate the messaging system with deferred settlement, with like credit instruments, but that decoupled it from the final settlement of the underlying commodity, and that presents problems, basically, right? In a number of ways. So, let's talk about that separation and what problems does that cause?
Yes, we can think of it in terms of magnitude, and there's three major errors. So before the telegraph, there were ways to speed up gold and silver, but they were very limited. So like things like coinage speeds up transactions. We don't have to sit down and count grains of gold. We just
standardization.
Standardization. Right. And then things like the invention of paper over papyrus, then bookbinding, and then the printing press. That basically drastically lowered the cost of encryption. We often think of encryption as a digital thing, but basically you need kind of, in that context, pieces of paper that can't be forged easily. And that's where things, and that are inexpensive. And that's where things like the printing press and paper were actually technologies at the time. And those things functionally accelerated the ability to transfer gold and silver around more safely, more efficiently, more quickly with some degree of abstraction or other things.
Yeah.
But it was still it's still literally moving at the speed of matter, just a little bit quicker at the speed of matter. What the telegraph did is it completely blew open the divide where people on two different continents could agree to make an exchange, because a transaction is basically just an IOU.
Yes.
Whereas final settlement could not be done at that distance. It would take, weeks, months, even years of shipping the gold, auditing it, something that just wasn't frequently done. And so what that did was that gave a ton of power to the entities that were running this ledger, the middlemen, basically. Yeah. And that was the banks, and then by extension, that was the central banks. And because those are really big honeypots, the government can just kind of say, well, we control that now. And so by having that kind of speed mismatch, it kind of put all the incentives toward that centralization and breaking.
Yeah.
And so now we're in the third era where after, for the first time, we actually have fast settlement. And the reason that came so much later is because you need way more bandwidth. You need more computation, more types of algorithms and encryption and all that. So it kind of just took orders of magnitude more stuff than simple Morse code. But we're finally in this period now where actually you do have, instead of this huge gap between transaction speeds and settlement speeds, we've caught settlement 90% of the way there. There's still the difference in speed between, say, Lightning and eCash versus Bitcoin, but it leads back to that really close gap where any sort of centralized middleman has way less power now, again, which is healthier.
Yeah, so reducing the attack surface. The attack surface is that delta between the deferred settlement transaction and the final settlement.
Yeah, pretty much.
And Bitcoin is closing that gap.
Yeah, we went through an era where that was kind of this inevitable concentration that happened. One of the analogies I make is that when hunter-gatherers basically developed agriculture, went into civilization, there's this period of time where they actually had lower life expectancies than the hunter-gatherers. Now, they had other advantages, like they proliferated and were able to, conquer the hunter-gatherers, but on an individual per capita basis, in many ways, quality of life went down for a period of time, and there was like this kind of trench they had to go through until they got to such point that they had like, medicines and electricity and running water and stuff. And then they finally were able to kind of actually have a fully better experience for the most part. And kind of money went through a similar valley that was kind of inevitable.
I see. What you have a chapter in your book titled A Unified Theory of Money. What is that pointing towards?
That's pointing toward the ledger system, which is basically taking the commodity theory of money, which for the most part I adhere to, but then pointing out that there are these other credit aspects that have been there also since the beginning, since the hunter-gatherer days. And there were books like David Graeber's Debt, the first 5,000 years, where they basically say barter never existed in the sense that we think of it. He actually referenced, there were essays by Alfred Mitchell Eames back in it was 1913 and 1914. He actually talked about those same subjects a while back. And my goal was to kind of take some of those arguments seriously enough to incorporate them into the model, which is basically to say credit is a part of money that goes back to the earliest tribes. But it ultimately just comes down to what ledger you're using. And in small little trusted groups, you can use informal ledgers. But anytime you want to travel between groups, or anytime you want to act in a more self-sovereign or trust minimized way, that's where nature's ledgers come into play. That's where gold and silver and other commodity monies or proof of work via Bitcoin's energy system.
I see. So is the challenge been something like, because early money, as you said, are these credit relationships, right? It's like it's somewhat obvious, like, oh, I'm going to go catch some fish, I'll share some with you, you give me some apples later, right? You could see how that would emerge in a very primitive society. But those are just promises, ultimately. And that promises don't really work beyond the Dunbar number, presumably, right? 150 people or whatever the number is. So then we need to then have some backstop to that promissory system. So that's like leads you into gold and commodity money. But then to scale gold and make it function in a civilized society that's connected by telecommunications, we're back to promises.
Yes.
Right? Because we end up sending these, I'm going to debit your account, credit your account. But until that gold actually physically moves, you're trusting the custodian or you're trusting the counterparty or some counterparties.
Yeah.
So is that were we with promises, then we went to commodity money, then we're end up back at promises as we tried to scale commodity money?
Pretty much. It's because we ran into that because our population got bigger and because we had telecommunication systems, we were operating under a much larger network now.
Yes.
And so the scaling was needed, and then that also centralized power. Even when you look today, the fun thing about fiat currencies is it's basically globally, it would look like a barter system. There's like 180 currencies. They work within their country.
Right.
Sometimes I even bring around currency with me, like Egyptian pounds or Norwegian kroner, and point out that this is basically not even money here. If I wanted to find someone to accept it for good service, it'd actually be kind of like uniquely hard. Even though these are ubiquitous monies in their place of origin.
Right.
And that's why even on the global scale with fiat currencies, they all tie into the top biggest one or two currencies in the world. For the most part, the dollar. To avoid that problem. And so it applies both to commodity money and then even to other fiat currencies.
Yes.
When you have these centralized systems and you have to go beyond that existing trusted relationship.
Yes. Okay. When I was debating Peter Schiff, this was probably the crux of my argument. That you can't scale gold without promises. Do you agree with that? Is that in trying to crystallize the argument of why Bitcoin over gold, is it that we can scale Bitcoin, I don't want to say without promises, but with a lot less reliance on promises? There's still going to be counterparties in capitalism and all that, so there's always going to be some counterparty risk. But we can do that in a counterparty risk minimized way, whereas we cannot scale gold in that way.
I think that's the crux of it. And it's not to say that gold is now useless. But much like how gold was kind of treated as the backstop for the equities and financial markets, I think in a digital world, gold's kind of the backstop. If people have, what about tail risks of everything going offline or something? People do the physical aspect of having, say, gold in their house or whatever. So it's not to say that it's useless, but it doesn't serve that same purpose of really trust minimize money. And even Bitcoin gives us totally new things you can do with it. You can do multi-sig custody and split your keys on multiple jurisdictions. So that even technically a nation state has trouble getting to it in any sort of direct sense. Whereas with gold, and this is really any real world assets, even if you put something like a blockchain on top of it, it's still tied to where's the actual custodian held, what is the legal chain that works there.
The Oracle problem, right?
Yeah, and like for example, and people often say, well, why can't you make like a gold-backed crypto? And it's like, well, they've existed for years. There are gold stable coins. There's a market demand for them. It's not very big, but it exists. And I can imagine, for example, if you want to, have access to gold, but you're in an environment where it's hard to get physical gold, you can't get the gold ETF, you can at least get this, semi-trusted chain of custody to hold that gap for you. But it's ultimately the same problem that they ran into time and time again.
This has been like a game theoretic conundrum forever then, right? Like, how do we exchange with one another in a way that we don't need to trust one? This is Nick Szabo's term, right? Trust minimization. Yeah. Why has it been, it seems like, I don't know, like there is no other solution than Bitcoin? Like, is there any, like, say if we didn't have Bitcoin, would there have been another solution to this problem?
I think eventually something like Bitcoin would have been invented.
Okay.
I mean, it could have, there's certain arbitrary things that could have been, it could have had a 42 million supply cap, for example. It could have had 12-minute block times. Yeah. But I think something like it, and we saw that, bringing up Nick Szabo, there was this existing chain of people that were working on it. It goes back to David Chaum, at least. Yeah. Back in the 1980s, his dissertation at Berkeley was like, basically, how can mutually distrusting groups operate a ledger?
Yes.
That's basically what he was doing.
Right.
And then when you add things like, what Nick added to it, what Adam Back added to it, what Hal Finney added to it, they were all kind of putting these pieces together. And it got to the point where they had, like, Hal Finney had reusable proof of work tokens.
Yeah.
That's very close to Bitcoin. And they didn't quite crack the decentralization problem, which Satoshi ended up doing with the difficulty adjustment, which continues to be kind of an underrated aspect. They added a fairly straightforward control loop to make this system work. And basically what that does, it takes Fedwire. So Fedwire is this foundational ledger that banks tie into. And it basically says, well, we can have something like that, but we can have it open source and backed by proof of work and no single entity is in charge of it. And it's got fixed units instead of arbitrary units. Mm-hmm. And that's now a competition that exists. I think another way of putting it is it makes trust optional, because even with something like Bitcoin, there are still scaling issues that sometimes custody solves. But for example, if you have $1,000 spending wallet versus, a $100,000 like life savings wallet, you have two different security requirements for those types of things. And sometimes you want the speed and convenience. It's kind of like how, you might have money in your physical wallet you bring around with you. You prefer not to lose it, but it's not the end of the world if you do. And I think that basically what this whole open source stack does is it says we can now choose who we trust and under what circumstances we trust. Whereas the fiat system, there's no option. Like for Bitcoin, if you were operating in any sort of economic sense, you need a bank account, and every bank that exists by permission of the central bank and the governing body. And so you had this big closed-sourced, fully centralized stack, and trust was mandate. You had to trust. And now at least you have the option to say, who do I trust and under what circumstances?
Right. That makes a lot of sense. And you can't even opt out of that system. If you're fully paranoid in a fiat system and you're the guy that stashes all your cash under the mattress, you still have the counterparty risk of the central bank, right? Hyperinflating the currency, deauthorizing it, whatever they may do.
Well, and even things like, running a business, getting a paycheck as an employee. I mean, we see them when people are debanked. It makes hard to function in the modern society. And that's something that prior to Bitcoin, there kind of was no answer to. And now there's an answer to it. And, these systems aren't designed so that every single person is, say, fully sovereign for every transaction they ever do in their life. But they always have the option to kind of fall back into more self-sovereign aspects when they feel like they need to, or they always have that optionality.
Yeah, that's the big change, right? You can not be fully exposed to counterparties. Right? Yeah. You can be the full-blown actual crypto anarchist running Bitcoin and have basically zero counterparty risk if you operate it properly.
Yeah, you have total workarounds that didn't exist before.
Yeah.
That's huge.
Yeah, and then just to reiterate the point on a multi-key custody solution, that is so fascinating, right? That we now don't even have to trust a custodian, including whether that's ourselves or someone else. You can now split that up amongst custodians or yourself, your trusted loved ones, your accountant, your attorney, whoever. such a game changer in
Yeah, that's
terms of
completely new for this entire asset.
yeah, yeah. What so back to that divergence then between information and money. Basically, in the 20th century, information way outpaces the speed of physical settled money. What is the role of the central bank in this? I mean, obviously the central bank predates the 20th century, but how does it emerge as a result of this divergence?
So the central bank was the coordinator, or still is the coordinator, to try to smooth this over. So going back to my prior point, even before the telegraph, there were these accelerating technologies that were gradually happening. Things like banknotes, things like printing press, and in the book, I referenced William Stanley Jevons. He wrote a Money in the Mechanism of Exchange in 1875. And it's good timing because it's like about a decade after the cross-Atlantic telegraph cable came out. But even aside from that, he was talking about the increasing centralization that was happening. So he's like, okay, so if I want to pay you, it's really easy if we have a bank that I can just say, transfer from my account to your account. The problem is if we have a third friend and they have a different bank, we want to have those banks to be able to communicate with each other. And if you're in a region where there's 20 banks, are they all going to be like sending armored cars to each other to kind of settle at the end of every day or every week, or how's that going to work? Well, it's easy for them to all have an account at a central bank.
Yeah.
And then if you have cross-border payments, it's like, well, two central banks can kind of tie into a bigger central bank. So he actually had these layers, 4 layers deep, where he's kind of saying that the system's getting more and more centralized over time. And he had the foresight to say, one, this is incredibly efficient because all this fiat's moving over, whereas gold barely ever moves. But then he's also like, because it's so efficient, it's levered 20 to 1.
Yeah.
And if this ever gets improperly run, which it arguably already is, we've already seen signs of it, and this is him talking at the time, he's like, this could be catastrophic. And of course, we know around World War I, it all blew up.
Yeah.
And so basically, even before the telegraph, central banks were already consolidating power by being their kind of fundamental ledger. But then the telegraph kind of really put the ball in their court, and that's how they were able to kind of go from some countries had them to basically the whole world operating on this system.
Yes. So is this a fundamental trade-off? Like, because you do get so much efficiency gain with centralization, right? If we're just running the whole world on one node, one database for money, there's one global central bank that decides all of that. That's hyper efficient because they just need to update that one ledger and don't need anyone else's permission. Right?
And that was Jevons' point. He's like, basically, the entire system's run through London right now because in his day it was.
Yes.
And he's like, that's both efficient but also kind of horrifying. Yeah.
Because it's highly corruptible, right? That someone could get in charge of that thing and then bend the rules to disfavor everyone else and favor themselves.
If one central bank does things improperly, and that central bank, the Bank of England, did in World War I, they literally lied and cheated about how much money they were printing. They obfuscated, and they rug pulled not just their own citizens, as the global was occurring to the time they rug pulled. So there were countries around the world that were holding like sovereign reserves. And they got rug pulled too. But centralization is efficient, but then can efficiently wreck everything.
Yeah.
So all the efficiency in gains can be efficient to basically spreading a disease.
Yeah.
In a sense.
Yeah, it's a weird thing to think about because you get this like radical increase in let's say efficiency across space, right? You can coordinate things very fast, but it doesn't seem like it's very survivable over time.
Yeah.
Whereas a decentralized system kind of flips that. It's like, well, Bitcoin's a good example, right? It's slow and inefficient because all the nodes are checking one another's work and it takes a while to update.
Yeah.
But that gives it persistence over time, even though it may be suffering in terms of transaction throughput through space. Is that a fundamental trade-off between decentralization being either anti-fragile or robust across time and centralized systems being highly efficient but fragile?
I think that's for the most part, but how much that matters really depends on technology. So, for example, before bandwidth and other factors got good enough for Bitcoin to exist. So Bitcoin existed almost as early as it could have, really. I mean, before then, the bandwidth globally was insufficient.
Yeah.
Types of encryption weren't there. So within a few years of those pieces coming together, Bitcoin existed. But before that time, there really was no other way to do it. And now is a time where Bitcoin is almost as efficient as Fedwire. Like actually, Fedwire does about the same number of transactions per year as Bitcoin, which is like a crazy statistic.
Yeah.
And of course, that's it's technically more efficient. Like you can transfer more for cheaper. but it's not that much cheaper. And basically, you have like say way more robust system for something that's 90% as fast, and that I think is an overall better design. And of course, in the really early days, it had to be tested. I mean, it wasn't a better design in the first year or two because it was still this kind of patchwork hobbyist type thing.
Yeah.
But as it's gone through the Lindy effect, as it's been around for 16 years, and as more and more eyes look at on it, and as it kind of slowly like stabilizes, it's now an increasingly viable competitor to Fedwire with most of the advantages, many of the advantage of its own, and very kind of limited downsides.
So obviously we're still living under the central banking paradigm. Inflation's been crazy for the past few years. It seems like it's starting to, that the pain that it's inflicting is starting to help people wake up to the realities of inflation, broadly speaking. I don't know if they're actually getting to the conceptual root of it or they're just feeling the pain, right? And maybe they're blaming the supply chains or whatever the government's blaming, but they're at least starting to pay attention to money and prices going up being a painful thing. How, when you look at the impacts of inflation in the chapter in your book, like it's a lot more than just economics. So what all do you try to look at in terms of inflation and its adverse impacts?
One is to kind of break it up and kind of point out what it is. So a lot of people, of course, think of price inflation.
Yeah.
I prefer to think of dilution, which is, for example, if you're holding a fiat currency, developed market fiat currencies historically grow in supply by about 7% per year on average. And so even if you're getting a yield, if you're getting, say, 3% or 4%, but you're getting diluted by units by 7%, your share of the network is shrinking.
Yeah.
And then you can think of that as other things. Like, for example, if you own a stock, are you getting diluted or are you getting or some of them buying back their own stock and you're holding up well? So it's often best to think of it in terms of being diluted.
Yeah.
And when you have that kind of foundation, inflation, like, if you look at, say, over time, money supply is growing up by 7% a year, but we are getting, say, every year we're getting usually 2, 3, 4% more productive, more efficient at making things. We see this most readily in electronics.
Yeah.
We see it less so in gold or energy or something like that, like more tangible home building. So there's a spectrum there. And so the other element of that is that basically inflation's a spectrum. And so there are some things that are close to pretty scarce. And so they actually tend to go up in price roughly in line with money supply growth.
Yeah.
And that includes fine art, that includes waterfront property. Sometimes things can go even up faster than money supply growth if you happen to, for example, predict years or decades ahead of time which population center is going to boom, or which artist is going to take off in terms of be the most popular one. But basically, the truly kind of scarce Lindy things, they kind of go up the fastest. Then you have semi-scarce things. So gold, it's increasing in supply by 1 to 2% per year. So if you map out its price performance, it kind of matches. So it's like, if you take into account the dilution, it's, slightly underperforming money supply growth, but roughly in line with its dilution rate. And then you look at oils doing something similar, but even a little worse. When you get into like agricultural commodities, they don't hold up very well at all because they're way more abundant. And then when you get into like electronics, they're outright, collapsing in value all the time. And so you have this big spectrum. And that actually misleads people because they think inflation is measured from zero, whereas really inflation is measured from a negative number because we're getting more productive. So prices, if we had this kind of flat ledger, like a finite ledger, prices would be going down. So even some inflation just gets us back up to zero, let alone positive inflation, which we all experience.
That's a great point. Yeah, so we often hear the target 2% inflation touted by central banks, but in reality, that's 2% price inflation over and above the negative 3% or whatever it would have been.
That's something like 5-6% inflation over their actual, the base.
And all that's getting stolen, basically. It's not just the 2%, it's the 5%.
Yeah.
Yeah, savers are basically suffering to the tune of that. That makes a lot of sense. What about the social, psychological impacts of inflation? Do you think a lot about this? Like, in terms of, obviously, it relates to time preference. But it's popular in Bitcoin circles to talk about fiat culture and all of these things. Like, do you think there is a connection between monetary inflation and, let's say, less purely economic phenomenon?
I think there are because it hurts productivity. And one way to quantify this is in addition, like a lot of people focus on savings being eroded, which is valid, but it's also every single contract in society gets impacted by inflation. Like imagine if you could push a button and every contract in the entire country gets shifted in one party's favor. That's what inflation does.
Yeah.
So if I was running a business making widgets and you're in a retail business that buys my widgets, we don't want to figure out every day how many I'm going to sell you and at what price. You're going to try to make a contract with me that maybe is 6 months or 12 months. And in a stable price environment, we have good foresight into what kind of pricing we're going to do. And but in a highly inflationary environment, we have to now make shorter agreements and remake those more regularly because neither of us knows what the money's going to be worth in a month or 3 months. So we have to now do more administrative overhead because money's inflating faster. And then that's true for also every single wage earner. Every single wage earner or salary worker is a contract with a company to earn a certain amount per unit of time or unit of work, whatever the case may be. And the government is able to kind of shift that contract. And so that, I think, has really big implications. And I use Egypt as an example because I lived there for part of each year. Their money supply is growing at 20 to 30% per year.
Crazy.
And so if you're operating in that environment, you're earning a wage, you're a small business. And I know wage earners and small business owners there. And I ask them, like, are you getting a 20% raise every year? Are you raising your small business prices to customers 20% every single year? And usually the answer is no. And so they're, even though they're trying to keep up, they're getting kind of diluted in the system that they operate in. And that's what really messes up the social contract.
For sure. Thinking of my business, one of my former business partners, his wife has restaurants in Turkey, and how often they had to reprice their menus.
Yeah.
And it was just like this unnecessary administrative headache. It's not totally non-productive, right? You're not increasing the output of sandwiches when you change your menus, but it's that uncertainty of inflation propagating through the system just sort of hits everyone. The entropy of inflation, I guess, hits everyone.
Yeah, and then also, I mean, if it goes on long enough, you can get brain drain. So people say, well, I don't want to stay here. I want to go elsewhere. So the smartest people that have the most resources to leave will, and then it's even harder to fix the problem. And so that's kind of a thing. There's also like virtuous cycles to the upside and vicious cycles to the downside, which can be very brutal.
Yes. Okay, so we've had this problem for a long, long time. We tried to solve it with central banking, but that didn't really work because we just centralized it, made it highly corruptible. And then, I mean, I would argue a lot of the stuff we saw in the 20th century was a manifestation of that, right? World War I, World War II, the petrodollar system, all these things were just kind of an extension of that. How does Bitcoin then come into the picture? And is it a viable solution to this trend toward centralization we have seen in the gold era?
So I think it's by far the best shot we have. I always hesitate to say that it's like inevitable, but basically it's the most credible way we have to get past this period of centralization. So for about 150 years, we've been in the period where, going back to my prior point, transaction speeds were speed of light, physical settlement was still slow. We finally invented fast settlement. Satoshi and all his predecessors finally figured out fast settlements.
Yes.
And then, we're kind of watching that catch on. It has to go through the massive network effect. It's up against the $100 trillion network effect of the dollar, the multi-$100 trillion network effect of fiat currencies globally, the whole global bond market, and all the governments tied to it. So this little open source thing is kind of doing this multi-decade path through this very entrenched system. It's gradually succeeding. It has things to navigate. It had to, navigate big countries trying to ban it and then figuring out they kind of can't ban it. And, politicians realizing that there's nothing to gain really from donors or anyone else, from voters, for being anti-Bitcoin. But there is a lot to gain from being pro-Bitcoin. And so it's kind of going through that game theory over time. There's a couple countries that are ahead of the curve and say, well, if other countries are going to be slow and even anti, we're going to be the ones that embrace it. It still has to go through some challenges. Like, if we do have, quantum computers, it's got to be able to make that change. And that has implications for signature types and potentially even block size issues with the length of those new signature types. So it has to navigate still, I think, some challenges ahead. But it's by far the best chance we have. And it's something that it's kind of fundamental. Like even if society were to rerun this whole modernization period multiple times, kind of like how the bicycle would always come before the car, would always come before the airplane, because basically you kind of have the predecessor stuff kind of built into it.
Leading into it, yeah.
We always would have Morse code before we have something like Bitcoin.
Sure.
And, Morse code could be called different. It could have a different, alphabet equivalent,
Yeah.
but it still is basically Morse code.
Right.
And kind of like how Bitcoin wouldn't necessarily have the exact parameters it has now, but something like Bitcoin, if you get to this period, would eventually emerge. And I think we want it to succeed on the first try rather than have to kind of start this project all over again.
Yes. Okay. So that's interesting. Perhaps the significance of it is that it is another step change in that telecommunications revolution. Although we're kind of pushing the telecommunications analogy somewhat, but money does serve as an economic telecommunications, right?
Yeah, I think the fundamental shift is fast settlement. That's the new breakthrough.
Yeah.
So it's not just another layer on top of that. So telegraph, telephone, radio, and internet were all just kind of faster and faster.
Yeah.
Whereas this actually brings up the bottom quicker for the first time. That's the fundamental difference.
So it's fast final settlement.
Yes.
So the energy is moving as fast as the information.
Yes.
Okay. Yeah.
Yes.
What you've in the last conversation we had that was on Zoom, you used the metaphor of an automobile to describe the significance of Bitcoin.
An automobile?
Yeah, you were talking about. I think it was like pick your own adventure with Bitcoin.
Oh, yes.
You say,
yes.
you could have the old beat up truck that you know how to work on, and you're kind of like the crypto anarchist, decentralized guy, or you could have the truck that like I have a truck I don't know how to fix, so I'm kind of a car shitcoin was the joke. Like, could you rehash that metaphor, because I thought that was so illuminating.
Sure. So one thing I point out in that show was that when the car became popular and affordable enough for Americans to own at scale, it became a symbol of freedom, because people could leave their city without really relying on anyone else. They didn't have to rely on these centralized systems. They could just get in their car and go. So that was like a symbol of freedom. And it's one of those things where some people to this day preserve that freedom tremendously. Like I had a former boss that literally would kind of rebuild his cars from scratch and knew how to fix every nut and bolt in them. And so he's about as
that's a don't trust verify.
Yeah, he's about as self-sovereign as you can get with vehicles.
Yeah.
Whereas other people will just lease their vehicle or just still use public transportation or whatever, and so they're fully reliant on the system. And the point is, you can kind of choose your own adventure along that path. Usually, we're all kind of like shitcoiners in some aspect, whether it's food, whether it's transportation. There's some area that we're just not focused on.
Because we have to trust.
Yeah, because and so money is one of the more important ones that people probably should be paying attention to. But there's still going to be this spectrum of, there's going to be people that are like power users that want to have as much kind of self-control and mastery of it as possible. There are other people that say, well, look, I'm comfortable in my jurisdiction. Maybe it's Switzerland, maybe it's Singapore, whatever the case. They're comfortable in their jurisdiction to say, I'm happy to have a custodian hold it for me.
Yeah.
I don't want to worry about it, or maybe I'm 70 years old and I don't want to lose my keys or risk it. Even though there are plenty of people of that age that can, but there are some people that just they have enough going on.
Sure.
And the whole point is there's kind of this spectrum of choose your own adventure, and it goes from full private self custody, do it yourself multi-sig, to collaborative custody, to fully custodial relationships. And I think that optionality is really important. So for me, I never really lose sleep over how many people are choosing to self-custody, use it in the best way. It's more like, are we doing enough to make it so that as many people as want to be power users can? Because I never would want someone to want to be a power user and just they don't have the resources to do it.
Right.
Whereas I can't do anything about that. If someone just doesn't want to be a power user, they don't want to fix their own car, they don't want to have their own multi-sig Bitcoin setup, or whatever the case may be, nothing I can do about that. I just want to make sure that anyone who wants to be self-sovereign can.
Yeah. It's kind of an opt-out thing again, right? Where you can just sort of opt out of the counterparty risk. But with that comes a lot of responsibility, right? Like if you do the full-blown multi-sig that you own and manage, well, don't mess it up, basically.
Yeah, there's responsibility.
There's no one to turn to, So let's assume Bitcoin succeeds and it does, on this mission of giving us the ideal money we talked about earlier, the decentralized spreadsheet in the sky that tracks favors that are rendered consensually and hopefully that's protected against coercive movements or modifications. Let's say, what is that? How does that impact social organization more broadly? Like, does this start to lead us into a future that is more decentralized? Like, if we decentralize the money successfully, how does that start to show up in society and social organization broadly?
I think if you
obviously you have to just guess here and speculate, but like, what do you think it looks at?
Yeah, so I mean, it starts with the assumption that Bitcoin gets massive and really starts to actually meaningfully displace currency and bond markets. That's basically the question. If you look at some of those older European maps, they'd be a lot more fractured than what it kind of consolidated into. And I think to some extent that kind of can reemerge in the sense that while governments will, in most cases, in most regions, still exist in various capacities, they have less of just a full control over everything. Like, for example, the full banking system is currently under every country's control.
Yeah.
They can go around that. And they have a much harder prospect of raising capital. Because, again, if like Egyptians, going back to that point, 20 to 30% money supply growth is happening. And there's very few ways to opt out of it other than power users getting into Bitcoin.
Yeah.
And even people that have gold stashed away, they still have bank accounts. There's always still some like residual stuff being just kind of opaquely taken from them by this seigniorage, this debasement. Yeah. And so it really just kind of closes the window of all these different issuers around the world for how much seigniorage they can get away with. Because they're competing with before they were competing basically with gold. Yeah. Or smaller countries are competing with the dollar. And so they're competing with something, if it's gold case, they're competing with something that grows at 2% a year and is really slow. If they're competing with the dollar, they're competing with something that grows at 7% a year but is pretty fast and usually gives you a yield that gives you some of that 7% back. Whereas now they're competing with Bitcoin that has zero long-term supply growth and is basically as fast as the dollar. And that's a much harder competition to go against. So I think it to the extent that Bitcoin gets another 10x or notably bigger from here and really kind of eats into fiat currency markets more, it really reduces the ability of all these different entities around the world to capture that scale of seigniorage.
Yeah, and then so that means less revenue for the centralized state. And then so does Bitcoin make government local again? Is that the direction we're headed?
It might. I think that the more conservative thing I would say is that it makes it more transparent in the sense that there might still be communities that want more government or want less government.
Yeah.
But at least they generally know what they're getting into. It's like they're saying, like, part of why we run, like my talk here was called Nothing Stops This Train. I was talking about the fiscal deficits. It's because we can't agree on how we're going to balance things. So this error just keeps spilling out as we fail to agree with each other. And in a Bitcoinized world, that can't really happen. There, like, defaults happen before that just runs forever. Yeah. And so basically it says, well, we can still pay for this, but we actually have to tax for it. And so and taxes are transparent. That's why if you go back to wars in the past, that's why even like older emperors and kings would debase their coinage, because it was a way to kind of go around the transparent tax system.
Yeah. People
revolt over taxes more than they, keep track of the exact metallic content of their coins. So it kind of just reduces the attack surface of how much can I opaquely steal from you?
Yes.
And so then, different places are free to still kind of choose how they want to govern themselves. And there still might be pockets of authoritarianism, unfortunately, but at least that opaque part is a much less viable option.
Yeah, that's a great point. This, I think, is one of the most pernicious problems with fiat money. It's something I think about a lot is they use this form of opaque theft, as you're describing, often called the shadow tax of inflation, right? That people don't know what's happening, right? The prices are going up. The government's blaming the supply chains, or they're blaming the greedy capitalists. And so there's this plausible deniability that the government has that they exploit. But then that is the weird part, is those proceeds that are stolen are used to fund, Keynesian economic pseudoscientific paradigms, the fake news of Joe Biden on the Super Bowl saying, oh, the ice cream price is going up and I'm going to not let the ice cream producers do that again. It's like this, the theft itself is then used to fund the ideologies that justify the theft. And so we get trapped in this like weird cycle. How do you think about that?
So it is a really big self-reinforcing network effect, which is why I think it still lasts quite a bit longer than maybe we'd hope for. But at the end of the day, it's still funded by bond markets. Propaganda starts to kind of diminish when the bond market is obviously failing.
This is happening now.
Yeah, and different parts of the world at different speeds. But people eventually lose, faith in the thing that they were maybe previously had faith in, because when things seem reasonably stable, you're more likely to believe things that are not true, that are kind of shown to you.
Yeah.
Whereas when things around you are just not working well, you're more likely to question things.
Yeah.
I mean, that happened, the whole like Cold War. If people got a taste of, if they were in one of the less free parts of the world and they got a taste of what the outside world looks like, it's well, wait a second, I don't seem like I'm on the winning side right now.
Yeah, for sure.
Whereas if you didn't even know that outside world existed, how would you even know?
Nothing to compare it against.
Yeah, and so I think that as this plays out, that kind of self-referential microphone just gets weaker and weaker over time. And like right now, gold is kind of reasserting itself in the global central bank system. They're saying, look, I don't fully trust the dollar. Some of these countries are stacking gold. I think some of the smarter ones, usually smaller ones, some of the smarter ones are also stacking Bitcoin. So around the margins, they can talk all they want about how the treasury market's safe, but they're increasingly, institutional investors that are like, this fiscal train's not going to stop anytime soon. There are central bankers saying this is not going to stop anytime soon. So that trust can still erode over time, and it just takes a while.
That's a great point. I remember in college learning about the risk-free rate, and I thought my head was going to explode. I'm like, what? That's not risk rate. That doesn't make any sense. But it's just this whole idea that the government, U.S. government in this case, can issue a treasury bond, and then they're the counterparty that never defaults because they can always issue the currency.
They can always print.
But that presumption or that axiom or whatever it is now not, it's crumbling, right? Or it's starting to crumble.
It's crumbling, and also as that ledger gets more top heavy.
Yeah.
So as we've kind of built up, debt on the sovereign level, for example, people are more aware of the fact that sure, it's technically risk free unless they kind of choose to default on sort of technical grounds. But you're not free of debasement risk.
Yeah.
So if the risk-free rate, let's say that the treasury yields 4% and the money supply is growing at 7%, your actual rate is like -3% per year.
Yeah.
You're getting bled out.
Yeah.
And that's kind of like paying really high property taxes.
That is a default, right? I mean, it's not a total default. It's like a partial incremental default.
Yeah, and then in history, this tends to happen kind of in bunches. So, for example, during the 1940s. They didn't default on their treasury bonds, but they printed so many dollars, and they defaulted on all their prior like gold obligations. That happened in the 30s, and then it happened again in the 70s. Those are types of defaults. And basically, we see this around the world, that when you get this lever, there's going to be a default. It's rarely going to be a nominal default in your own printable currency units, but instead it's a default in purchasing power. And particularly, it's a default compared to the most scarce things. Yeah. So even if they manage to keep inflation somewhat on the rails for things like food and electronics and other kind of things that we're way more productive at making, it's still a major default on anything of like truly scarce value that people want. High energy stuff, good properties, gold, big oil, these types of things. The ability to fly comfortably, the best healthcare. Yeah, that is a default on those types of things.
Yes. Okay. That makes sense. Last question on this. I saw someone tweeted this today and I missed this announcement, that someone announced at this conference that funding Lightning channels was generating like 9% yield.
Block did that, yes.
Block did. Okay. And it's, again, risk-free rate maybe is a dangerous word, but this is close to risk-free rate on Bitcoin, perhaps. I want to ask your opinion on it. This is obviously something Nick Bhatia predicted 3 or 4 years ago. What's the legitimacy of that as like being the future risk-free, air quotes, rate for Bitcoin? How do you think about that?
So I wouldn't call it risk-free, but it is interesting because it's self-custodial yield or self-custodial ROI, which is interesting.
Yeah.
The reason it's not fully risk-free is because in a Lightning channel, it's basically a hot wallet, right? Yeah. So you're making a security trade-off. Instead of having like deep multi-sig cold storage, you're bringing some of those coins up to the surface. Yeah. And, this has been a fairly stably operating system. So it's a fairly low risk. But there's still some risk. And it's just that they're not relying on a counterparty. So it's a new way to generate ROI. And then there's also a skill issue. Either they have to do it themselves or other entities can, in some cases, find a service to do it for them. like a Lightning service provider that is able to do this. But basically, that's putting assets to work to help move things around.
Yeah.
And so I think it's fully legitimate. I just wouldn't fully call it risk free.
Yeah.
But I do think that there is kind of this new, basically a yield curve forming, which is, in a Bitcoin world, there's some money to be made from enabling liquidity, and that makes some degree of kind of technical, risk trade off. And then there's still a role for lending. It's just not the type of lending we're associated with. There's still, for example, I think collateralized lending. If someone has a house and they want to borrow 10% of its value for liquidity purposes, you can make a contract with someone that says, look, I'll loan you 10% of your house worth of Bitcoin, but if you somehow default on this, I get your house.
Yeah.
And so that type of lending can still exist. It's just a much smaller part of the economy than what we're used to in a fiat system, because in the fiat system, there's really two types of debt. One is like high ROI debt, like a small business wants to expand. Yeah. They take a 2-year bank loan. They put it to really good purpose, hopefully, and then they build something where you want to go to
credit.
You want to get a engineering degree. You take out some debt and go through the system. Then there's like the type of debt that you only have because you're arbitraging, you're shorting fiat currency. So that includes government debt, basically. That includes there are companies that have been profitable for like every year straight for like a century, like Coca-Cola and Procter and Gamble, for example, and they have like $40 billion in debt each, and yet they're highly profitable. It's like, why do they have that debt? And it's like, well, because they could issue it at 2% and basically short a 7% growing currency for 30 years at 2%. So they did, and they bought better things with it, like their own stock in many cases. And so that type of like debt that only exists because you can doesn't make sense on a Bitcoin standard. But high impact collateralized lending still makes sense, and then using Bitcoin for liquidity purposes, like generating with your own Lightning node, that makes sense.
Beautiful. Lyn, thank you so much.
Thanks for having me.
It's good to see you again. Where can people find you on the internet?
LynAlden.com, or they can check out my book Broken Money on Amazon or Barnes & Noble or elsewhere.
Awesome. Thank you so much.
Thank you.
iCoin Technology has released a slick new hardware wallet. It looks like a mini iPhone with a high-res 3-inch touchscreen and camera on it. The device has no Wi-Fi, no cellular connection, and no GPS. It is an air-gapped hardware wallet which uses QR codes and a camera to communicate with the Bitcoin network. It has a built-in camera which is required for air-gap operation, and it has an optional Bluetooth compatibility. It's really a brand new user interface and user experience for a Bitcoin hardware wallet. iCoin makes self-custody accessible, easy to use, and non-intimidating. It even comes with an optional custom iCoin thermal printer, so you can print out the private key and its associated QR code when you're setting up the wallet. This makes setup quick and simple. Also, it is easy to restore the wallet just by reading the seed phrase QR code with the wallet camera. And as we always talk about on this show, the only way you can truly own your Bitcoin is by having it in self-custody. So you need a device like the iCoin wallet to truly own your Bitcoin. So go to iCointechnology.com/breedlove today for 30% off the purchase of this sleek new hardware wallet. Again, that's iCointechnology.com/breedlove. In times of chaos, clarity can be currency. Right now, supply chains are fragile and cash flow has never been more volatile. If your business can't adapt in real time, then you're exposed. That's where NetSuite by Oracle comes in. It's the #1 cloud ERP, trusted by over 41,000 businesses for a reason. It gives you total visibility, from global shipments to real-time cash flow to the true cost of what's stuck. NetSuite consolidates accounting, finance, inventory, and human resources into one unified platform, one source of truth. With AI baked in, routine tasks get automated away so that your team can stay focused on high-leverage activities. If I were scaling a business right now, NetSuite is the system I would use. One system, full control. With NetSuite, you can tame chaos. If you're running a business doing 7 figures or more in revenue, grab their free ebook, Navigating Global Trade, 3 Insights for Leaders, at netsuite.com/whatismoney. Again, that's netsuite.com/whatismoney. If you're anything like me, you understand that Bitcoin is something we can use every day to connect, to collaborate, and to build stronger, freer communities. As true Bitcoiners, you all know we are each responsible for onboarding more Bitcoiners. That's why I chose to partner with Cowbolt, an expense splitting app that settles in Bitcoin. It can be as simple as splitting a dinner bill. Your friend covers dinner and you reimburse them, but you send it back to him in Bitcoin. Now your friend has their first sats, and as I always say, where your money goes, the mind follows. By using Cowbolt to get Bitcoin into the hands of your friends and family, you can help us orange pill the world. Cowbolt is built to let you split costs, share expenses, and settle instantly, while always keeping full control of your keys. Cowbolt is simple, social, non-custodial, exactly how Bitcoin was meant to be used. If you're serious about Bitcoin, it's time to act like it. Download Cowbolt today on iOS or Android. To learn more, go to cowbolt.com. Again, that's Cowbolt, COWBOLT.com. Forget multivitamins and other supplements. Animal organs are the most nutrient-dense foods on the planet. You can get 100 times more nutrients from organs than you can from muscle meats. But the problem with eating organs is that they are difficult to find in stores, they are difficult to prepare, and even when they are prepared well, they often don't taste great. Thankfully, Heart and Soil Supplements has made consuming organ meats so much easier by providing powderized organs in capsule form. Organ meats include everything your body needs to thrive: vitamins, minerals, peptides, proteins, and growth factors. This is why organ meats were the most prized foods for our ancestors. Fortunately for us, Heart and Soil makes these treasured foods easily accessible. So go to heartandsoil.co today and use discount code BREEDLOVE to get started on your journey to optimal health and vitality. Again, that's heartandsoil.co, discount code BREEDLOVE. Would you rather have 1 Bitcoin today or 2 Bitcoin a few years from now? Bitcoin mining is a tried and true strategy for accumulating Bitcoin. Over a 2 to 4 year time frame, successful miners have consistently accumulated more Bitcoin than they otherwise would with a traditional dollar cost average strategy. Blockware mining as a service enables you to start mining Bitcoin from your laptop. Blockware handles everything from securing the miners to sourcing low-cost power to configuring the mining pool. They do it all. Plus, with Blockware's one-of-a-kind mining marketplace, you can buy and sell live Bitcoin miners with just a few keystrokes. In this marketplace, buyers get to purchase live machines at vetted facilities, enabling them to mine with zero lead time. And sellers get the opportunity to liquidate their machines and hosting contracts at will. This means you can mine Bitcoin with zero long-term commitment and high liquidity on your mining rigs. Blockware will even cover your energy bill for 1 week per mining rig when you sign up at mining.blockwaresolutions.com/breedlove. Again, that's 1 free week of Bitcoin mining at mining.blockwaresolutions.com/breedlove. And on top of this offer, you can also use code BREEDLOVE to get $100 off your first mining rig with Blockware Solutions. Have you ever wanted to start a business in the Bitcoin space? If so, then the Wolf Startup Accelerator could be for you. Wolf is the first startup accelerator dedicated exclusively to businesses developing in the Bitcoin Lightning Network. 4 times each year, Wolf brings teams from around the world to New York City to work with like-minded entrepreneurs, pushing the boundaries of what's possible with Bitcoin and Lightning. The program is designed to help early-stage companies achieve product-market fit, develop their brand, secure early-stage funding, and grow businesses that fuel the global adoption of Bitcoin. Go to wolfnyc.com to learn more or apply today. Again, that's Wolf, WOLFNYC.com. Bitcoin custody is evolving. Both self-custody and single third-party custody come with significant risk and trade-offs. Onramp is pioneering a new standard, multi-institution custody, which eliminates single points of failure, adding fault tolerance and redundancy to your setup. Onramp secures your Bitcoin in a segregated cold storage multi-key vault guarded by 3 independent institutional-grade custodians, none of which have unilateral control over your keys. Your funds are fully auditable on-chain, cannot be rehypothecated, and can only move or be withdrawn at your explicit direction. Multi-institution custody removes the technical, mental, and physical burdens of private key management, providing unparalleled peace of mind for you and your loved ones. Bitcoin is money, and as the price continues to appreciate, Onramp helps you seamlessly tap into financial services like trading, inheritance, insurance, loans, IRAs, and more, all without compromising on security or accessibility. Schedule a consultation with the Onramp team to learn more at onrampbitcoin.com/breedlove. Again, that's onrampbitcoin.com/breedlove. One of my highest health priorities is keeping my brain in top shape. To take care of my brain power, I do many things, such as striving to read, write, exercise, and meditate daily. One of the latest tools in my brain power toolkit is MindLab Pro. MindLab Pro is a nootropic supplement that is scientifically proven to enhance your brain power. When I take MindLab Pro, my mind feels like it has a better grip on the world, my thinking is more lucid, and the articulation of my speech is radically improved. MindLab Pro has been tested in rigorous, double-blind, placebo-controlled human trials and has been proven to enhance brain power for users in every age group. MindLab Pro is an advanced formulation of 11 nootropic ingredients and is backed by research from over 1,400 human trials conducted over the past 32 years. So if you're looking to enhance your brain power, MindLab Pro is an excellent solution. Go to mindlabpro.com/breedlove to start enhancing your brain power today. Again, that's mindlabpro.com/breedlove. Knowing when to buy Bitcoin can feel complicated, and knowing how much to buy can be overwhelming, and getting started can be a headache, but it doesn't have to be. That's exactly why I recommend Coinbits, because it solves these major blockers and it's the easiest way to buy Bitcoin. With Coinbits' Round Ups feature, you can automatically convert your spare change into Bitcoin while you shop. For example, when you buy a coffee for $3.50, the extra 50 cents is rounded up and it goes straight into Bitcoin. Here's why that's a huge win for you, because you don't have to be a tech wizard or try to time the market just right with Bitcoin. With Coinbits Roundups, you simply set it, shop, and stack sats. And you can set this up in under 2 minutes. Just visit the website, connect your card, and boom, you're buying a little Bitcoin every time you spend money. So stop wasting your time with complicated exchanges or confusing shitcoin apps. Coinbits simplifies your Bitcoin savings strategy. So go to coinbits.app/breedlove. Again, that's coinbits.app/breedlove. Have you ever wanted to live in an off-grid community with complete food, energy, and water independence? If so, then you need to check out the farm at Okefenokee. The farm is a pioneering community designed to foster longevity and well-being, eliminating elements that detract from these goals. At the farm, the convergence of nature, nutritious food, a supportive community, and the ethos of slowing down is unparalleled. Positioned at the gateway to the UNESCO World Heritage nominated Okefenokee National Wildlife Refuge, the farm at Okefenokee stands as a testament to a lifestyle that truly nurtures health and happiness. Unlike conventional housing developments where a token communal garden may suffice, the farm itself is the community. Small, intimate micro-villages seamlessly integrate into the fabric of a sprawling agricultural community. So if you're interested in joining this off-grid community, then go to okefarm.com today to learn more about becoming a member. Make sure to tell them that I sent you for a $21,000 discount on their custom cabin pricing. Again, go to okefarm.com to learn more about joining this revolutionary regenerative agriculture community. Thanks for watching. If you enjoyed this episode, click here to find more just like it, and here to find our most recent episode. Also, make sure to like this video to help shine light on the corruption of money. And be sure to subscribe to this channel to stay connected.